Most people think insurance begins after something goes wrong, but its real power often appears much earlier. Before the loan, before the journey, before the investment. Before a bank releases money for a home, before a cargo ship leaves port, before a hospital installs a new machine, and before a company signs a major contract, someone asks a quiet question. If this goes wrong, who pays? For decades, the answer was easy to overlook: insurance. But that answer is becoming harder to take for granted. Climate losses are rising. Cyber risk can cross borders in seconds. Artificial intelligence is entering underwriting and claims. And in some places, cover is becoming more expensive, narrower, or unavailable. Insurance looks like paperwork. Underneath modern life, it behaves like infrastructure. And today, that infrastructure is being reshaped by 3 questions: who reaches the customer, who controls the data, and who has the capital to keep the promise. Think about a mortgage. The bank does not only ask whether you can repay. It wants to know what happens if the building burns, floods, or becomes uninhabitable. A business lender asks what happens if a factory stops, a machine fails, or a customer is injured. A shipping company needs protection for the vessel, cargo, crew, and sometimes the political risk surrounding the route. A hospital, airline, data center, or construction project can each carry losses larger than the organization operating it. Insurance does not remove those risks, and it does not provide legal permission for every activity. It provides something just as important: economic permission. It converts a potentially ruinous loss into a price shared across many policyholders, investors, reinsurers, and years. That changes decisions before anything has gone wrong. A lender can lend. A company can invest. A ship can sail. A family can rebuild. Insurance is not only the system that pays after an event. It helps decide what can proceed before the event. At its simplest, the machine begins with a premium. But your premium is not placed in a personal box waiting for your claim. It enters a pool. Insurers use data and judgment to estimate how often losses may occur, how severe they could be, and how much must be charged today for promises that may be tested years from now. Some premium pays current claims. Some covers operating costs. Some supports reserves for claims that have happened but are not yet fully known. Insurers also hold capital for outcomes worse than expected and invest assets so future obligations can be met. Insurance is therefore not only something used after a loss, it is part of the hidden infrastructure that allows modern life to move before the loss ever happens. The full Lessons Untold documentary explains who sells the protection, who actually carries the risk, and what happens when the insurance system itself comes under pressure. Watch the full documentary on Lessons Untold.